Former New York Fed President Bill Dudley doesn't think the Fed should play along with President Trump's demands. In a Bloomberg op-ed, Dudley said the Federal Reserve needs to stay above the political fray to maintain its independence. Joining us now is Yahoo Finance's Brian Cheung. Except he says that, but then he effectively says that the Fed should not enable President Trump and maybe even should actively disable or decrease his re-election chances.
Yeah, so this is a new spin.
I mean, it's getting a lot of attention.
It is getting a lot of attention in the monetary policy circles. And for what it's worth, for those that don't understand why this is a big deal, why this op-ed is a big deal, it's because Bill Dudley was the head of the New York Fed for about 10 years or so. Keep in mind that the New York Fed is a permanent voting member of the FOMC. It's arguably the most important reserve bank in the system. He's no longer the Fed president, but it's not so long ago that he was. Keep in mind, John Williams only came on board at the New York Fed not so long ago. So the opinion piece, the big crux of it is that he argues that the Fed shouldn't necessarily ease policy because it might enable Trump to ratchet up the tariff war even further to the point where the Fed continues to get backed up against the wall. You can make the argument that maybe that's happened already, but that doesn't really acknowledge the flip side of it, which is if the Fed doesn't try to ease policy, then maybe that does throw the U.S. into a recession because Trump is still going to keep going with this trade war. And the shot with no chaser at the very end of this opinion piece is that if the goal of monetary policy is to achieve the best long-term economic outcome, then Fed officials should consider how their decisions will affect the political outcome in 2020. Translation, maybe the Fed should pay attention to the election next year in setting its policy, which...
I mean, we are so far from the dual mandate at this point.
Right.
It's pretty astonishing. Just to remind folks, the dual mandate of the Fed.
Maximum employment and stable prices.
Exactly.
Neither of those things are political in nature, but it does raise this question about the Federal Reserve needs to react to what's happening in the economy. And for right now, the biggest story happening in the economy is mostly political. It's a trade war. So is the Fed independent from politics? Yes. But does the Fed need to have a grasp on politics and not necessarily take a stand from a Republican or Democrat standpoint, but take a stand in terms of what is the proper way to steer what is the only control that it has, which is over interest rates, to react to those policies. So it's political in a way that the Fed is kind of indirectly responding to it, but not political in the way that Bill Dudley is suggesting here. I think that's why you're seeing the backlash right now on Twitter, especially. It seems like no one really agrees with the idea that the Fed should be politicized or should be prioritizing the election in its policy setting. But I think Bill Dudley's point is something that can't be ignored because of the fact that he's such a big name.
I don't agree about prioritizing the election. I think if he's making the point that the Fed should just get out of the game and just let Trump do his own thing and not have his back every time, then I think that should be the argument. And that I can agree with, because I think that the Fed definitely should not be going with the whims of politics. Trump knows that, you know what? If I escalate tariffs, the Fed has my back. They're going to cut interest rates, and the Fed is not being independent, and that's what we need them to do.
But it's not a direct.
From that standpoint, it would be great to see the Fed say, you know what? Whatever you do, China's not paying for it. You're paying for it at the ballot box.
But the problem with that thinking is that the trade war does affect the U.S. economy and can have effects on stable prices and on employment, right? And the other issue with all of this is that the markets are on Trump's side, right? Mm-hmm. In other words, it's very difficult for the Fed to operate independently of the bond market. And right now, the bond market is pushing the Fed to cut rates.
Yeah, and we need to remember that this is not a new story. This story about what the Fed needs to do in reaction to trade has been playing out over the last year. Yeah. The Fed only made its first cut July 31st.
But there's the September meeting.
There's a September meeting that's coming up.
It's an ongoing,
And here's the question. Right now, a lot of the consensus among economists is for the Fed to do what Trump wants, which is to cut rates further, right? The problem is, how do you do that without the optics of looking like you're being influenced by the president, even if that's the right move, though?
Yeah.
So are markets wrong necessarily? I mean, look, it's a 100% chance that they're pricing in to Fed funds futures contracts that there will be a cut of at least 25 basis points in the September meeting. But even though in the nuances of the short term, we might understand that the Federal Reserve and Jay Powell are doing their best to try to be independent and not be swayed by the president's tweets, what's going to happen 5-10 years from now when people look back on this chapter of monetary policy history and they see Trump happened to lob a bunch of tweets at
it's going to look bad,
saying that he's equivalent of a threat as China, and then the Fed cut rates.
Right.
Correlation, not causation.
All right. Looking back from ahead at the historical implications. Brian Cheung, thank you.